Have you ever noticed how some companies always seem to understand what you want? That's because they use smart data and technology to make better decisions. LatentView Analytics is one of the top companies which helping businesses to do better. They use latest technologies and tools to turn data into useful insights. If you come from data science background like me, you might already understand some of these. But don't worry, I'm here to explain everything in very simple language. But before I start further, I want to caution you, this is not a buy sell call. So let's jump into it. LatentView did better than expected. It had planned to grow by 18 to 19%, but actually it grew by 22% compared to its last year. It is mainly because it's a new company Decision Point which crossed its revenue by $100 million. A big achievement within just 3 years after getting listed on stock market. LatentView Analytics is one of the top companies which help businesses do better in the future. They use smart data and technology like generative AI, machine learning, computer vision, NLP and so on to turn data into useful insight. It might even predict what will be the sales in the upcoming quarters. They also build systems to handle large amount of data and create tools to solve business problem. LatentView works with the very big companies across different areas including shopping, retail, banking and many more. LatentView serves top 4 sectors. First one is financial services. Under these, it finds fraud and manages risk. Second one is consumer and the retail sector. Under these, what people say on social media, they recommend product accordingly and find out consumer pattern behavior. Third one is industrial sector. Under these, they predict product demand. Fourth one is technology. Under these, they understand customer behavior and improve marketing. Under the revenue-wise breakup, technology sector contributes 71% revenue, industrial sector contribute 12% revenue, consumer and retail sector contribute 9% revenue, and financial services contribute 8% revenue. Under the geographic section, USA contribute 95% revenue, Europe contribute 2% revenue, and the rest of the world contribute 3% revenue. To help companies make better decisions, LatentView uses smart data and new technology including ChatGPT, computer vision, NLP, machine learning, generative AI, and a cloud platform including AWS, Azure, and Google Cloud. Now discuss future growth. LatentView expect its revenue to grow about 18 to 19% in 2026 and hopes to reach over 25% growth if everything goes well. They aim to have a profit margin of 23%, but it might be lower in the first half of the year because some of salary changes. In the long run, they are ready to keep profits lower for a while to invest in growing the company, aiming for $200 to $220 million revenue and over 25% margin later. By the end of 2025, they had 1,151 crore in cash. They have about 1,650 employees now and some financial cost increased due to payment links to a recent acquisition and a new office's lease. Under the risk, headwinds and management outlook, LatentView faces some challenges like uncertain business condition, especially in retail, and delays in client budgets early in the year. Half of their money comes from just 2 big clients, which can be risky, but they have many ongoing projects and expect no loss in important work. New technologies like AI and data engineering are seen as a big chances to grow. The management feels careful but hopeful, believing the company will grow well in the next 3 years. Now discuss financials. LatentView Analytics has a market value of around 8,500 crore. Its current PE ratio is near to 50, a bit lower than its 5 years median PE of 54.9, showing reasonable valuation. The company delivers solid returns with the ROC at 15.9% and ROE at 12.1%, and it carries very little debt with the debt to equity ratio of just 0.02. In March 2025, LatentView posted its highest ever quarterly sales of 232 crore and a net profit of 51 crore. For the full year, sales reached 848 crore and net profit hit 173 crore, both record numbers. Sales have grown rapidly at a 28% CAGR over 3 years, while net profit increased by 16% CAGR, which seems very impressive. But surprisingly, the stock price has only grown around 2% annually, which seems undervalued. Promoter controls a strong 65.24% of the company, while FII and DII holds about 3% each. The public owns 28%, including 7% by HNIs. Now discuss technical chart pattern. This stock price has fallen about 45% from its lifetime high, going from around 534 in April 2022 to near 400 by December 24. During this time, it formed a complex curve with handle pattern almost making 3 handles. However, the support at the handle failed, causing the price to drop further. Because the handle support broke, the classic curve and handle pattern may no longer be valid. To understand this better, we need to measure the depth of the curve. That is how far the price fell from the peak to the bottom of the curve. If you have thoughts on whether these patterns still exist or how long it might take for the stock to reach its previous high again, please share your views in the comment below. I can't explain everything here due to regulation, but I'm eager to hear your ideas. Thanks for watching. If you found this video helpful, please share your thoughts in the comment below. Do not forget to like and subscribe for more easy to understand stock market insight. I will be see you in the next one. Till time, happy investing.